Hey guys, welcome back to another video. Today we'll be doing an analysis on fuel cell energy as it was recommended in the comment section. First thing I'd like to take a look at is their P ratio. So they currently do not have one. So when a company doesn't have a P ratio, it means that the company has been doing nothing but losing money. So first off, this is a huge red flag right away. Why would you invest into a company that's losing money? The last thing to take a look at on this page is if they offer a dividend, which they currently do not. So they're already losing money, so I don't see why they'd even be financially capable of issuing dividends, which is probably the case. So getting into the income statement now, I want to start off their revenue. So the core foundation of any company is its ability to generate revenue, and this seems to be the complete opposite of what FuelCell likes to do. They've literally been making less and less money every single year. The most recent year, it did jump about 10 million, but that doesn't erase the fact that they're still making an extra 40 million 5 years ago. So you want to see a company consistently increase their revenue for a couple years before buying. Do not base your buy off of this one decent year. Moving into their net income now, it looks just as bad as the revenue. They've managed to make less and less profit every single year, and I feel like I don't have anything else to say about this. It's just awful to see. The last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease over the years. But unfortunately, in their case, it has been doing nothing but increasing. Especially in the past year, it's taken a huge jump. So this is definitely something to keep in mind. Definitely not anything good at all. Let's get into their balance sheet now. So let's take a look at their current assets. As of right now, it is at about 234 million, which is looking okay because it's up from the 202 million just 5 years ago. Now looking at their current liabilities, these seem to be also doing pretty okay. It is up from 2016, but it is down from the last 3 years. So this is a potentially really good sign to see. Overall, it is good to see that they have about 175 million more in current assets than current liabilities. One last thing I want to show you guys on the balance sheet. So remember this number 58.9 million, okay? So they have 159 million in cash on hand alone. So this is really good because they could pay off any liabilities, well, any current liabilities at moment's notice if they really needed to. The last and one of the most important aspects to look at in any company is their free cash flow. So as you can see, it looks terrible. They have had one barely positive year with the 6.29 million. So companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you want to see be improved on year after year, and that is clearly not the case with this company at all. In conclusion, FuelCell has no business being in any type of investment discussion. There is literally no value in the company from what I have seen with the financials. Even from a speculative investing mindset, I can't even see why you put money in this right now. There's literally nothing enticing about what I mentioned throughout the video. Between the constant decline in revenue, the huge increase in shares outstanding, and there being no cash flow, it's safe to say this company's trash. Anyways, guys, I want to point out that I am not a financial advisor, so I recommend doing more research before coming to the conclusion of buying or selling the stock. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.